The hotelification of real estate is perhaps most obvious in offices. Within the last decade, our concept of a workspace has changed dramatically. Many of us prefer to collaborate in shared spaces rather than to be cut off in individual offices. And corporate tenants are increasingly trying to find a way to sign shorter or more flexible leases. These days, an office landlord must provide more than just an empty box. But how do you underwrite for the risk that naturally comes with a shorter-term tenant? And how do you remain competitive? Experts give us a first look into how this industry is changing. This is Christopher Kelly, co-founder and now vice chairman of Convene. The company emerges onto the market with a new kind of business model that offers companies shorter-term leases, flexible areas to work, and various office amenities. The co-working company acts like a hotel brand, leasing space from a landlord and subletting to corporate tenants.
Every one of our floors has our signature Nourish Cafe concept, where you have snacks and then a variety of different coffee drinks. And of course, we have our tea, kombucha, cold brew, and beer on tap. We're in the full throes of an innovation economy where talent is the most coveted resource for companies. And so what talent wants is what tenants need, is what landlords must build. Real estate used to be about selling concrete slab by the square foot. Customers today and tenants today are really looking for something that is much more experiential.
Adriana de Alcantara is a managing director and portfolio manager at Nuveen Real Estate. She focuses on the U.S. real estate market and manages two sector diversified portfolios that target office, retail, multifamily, and industrial assets.
You need to have a rooftop, you need to have the gym, you need to have conference rooms. It really depends on the market to make sure you attract the tenant, and for the tenant to attract their employees as well and retain talent. Flexible space in 2030 is going to be 30% of the overall stock in the market against a 5% today. So landlords are going to need to step up. They are going to need to spend more money in their spaces. They are going to spend more money in amenities, in common areas, to compete with flexible space and co-working tenants as well.
You're going to see a fork in the road where vertically integrated operators are going to bring these functions in-house, and where institutional investors are going to partner with third parties like Convene to deliver on user expectations.
There is a reason why co-working brands like Convene, WeWork, and the Office Group have been gaining ground. The way we work is changing, and that might mean landlords will need to spend a little bit more on CapEx or take on more risk in the form of flexible space.